Hello and welcome to Markets Today. I'm Lata Venkatesh, and joining me from the Delhi News Centre is Surabhi Upadhyay. It was, a down day in the markets. You shouldn't grumble too much because it comes after 7 days of higher finishes for the market. So there was something inevitable about today's fall, and all the heavyweights contributed to the fall. Reliance Big Boy contributed the most, but there were losses that were chipped in by ICICI Bank that fell about 2.25%. Larsen & Toubro, Infosys, HDFC. You can't have an up day when these 5 big boys, which are almost 30% of the market, have decided to sulk a bit. But nevertheless, the losses were minor. Hi, Surabhi.
Hi, Lata. Yes, let's straight away get to the top stories. The 7-day winning streak ends. The Nifty loses about 0.7%. The Sensex also down about 230 points as late selling comes back into the market. Oil and gas, technology and bank stocks see the maximum amount of fall. Mid-caps end flat.
JSPL ends lower after failing to qualify to bid for the Gare Palma 4x1 coal block. Management says they don't want to be too aggressive. The coal secretary says the auctions have raised over 83,660 crore rupees so far, with states earning another 12,800 through royalty.
Crompton Greaves announces a change in its demerger plans. The consumer products business will now be split vertically, and shareholding of the resultant entity will mirror that of Crompton Greaves.
SpiceJet hits upper circuit as it gets the Competition Commission's approval for its restructuring plan. Mastek sees an 8% spike on plans to list its subsidiary Majesco on the NYSE. Well, those were some of the headlines from the market, and here are the experts that we have lined up on the show for you now. Jeffrey Dennis of UBS will join in to talk about what the world expects from the Indian budget. Tushar Pradhan of HSBC Global Asset Management will talk about the market's trends in the days to come. And we will get you the Coal Secretary Anil Swarup and a whole host of experts to talk about the ongoing coal block auctions, as also the road ahead for these sectors.
Okay, let's take a look at the day gone by first up. Then the 7-day winning streak is finally over. Stocks tumbled yet another volatile session on Dalal Street. Sonia Shenoy is now joining in to wrap up the day's market highlights. Sonia?
Hi, thanks for that. Well, today was an extremely volatile session on Dalal Street, something that we've been seeing through the course of the week. But by the end, you got quite an uncomfortable feeling in the market. In fact, the Sensex was down about 230 odd points. And what's more disconcerting is that a lot of blue chips sold off today ahead of the big budget week next week. For the entire trading week, the Nifty was flat, but the mid-caps outperformed. As I said, a lot of heavyweights put pressure on the market. So the likes of Reliance, ICICI Bank, HDFC, L&T all came under selling pressure. Apart from that, technology names like HCL Tech, Infosys and Wipro were down as well. While on the gaining side, you had names like BHEL, ITC, Dr. Reddy's and Lupin that did well. Some of the banks recouped some of their losses. So Bank of Baroda, IndusInd Bank and PNB were higher. While in the mid-cap end of trade, you had names like Titagarh Wagons, Shrey Infrastructure, IDBI Bank and JN Irrigation that did well. And on the losing end, a lot of infrastructure names came under pressure. So the likes of HCC, GVK Power and Lanco Infrastructure were down. The market is going in with low expectations ahead of the budget. So there has been some money taken off the table today. Back to you.
Fair enough, Sonia. That seems to kind of describe the market's mood today. Take out a little bit of money, especially as you head into a weekend. And, of course, there will be time to accumulate long positions before the budget next Saturday. As well, there is some kind of a budget-related buying. There is an expectation that adhering to the fiscal deficit will bring interest rates down. So you had the PSU Bank Index up and about. Even though the Bank Nifty itself didn't contribute so much, the PSU Bank Index moved in exactly the opposite direction, gaining about 0.9%. So it was a rank outperformer today, led by the likes of PNB, IDBI Bank and a whole host of public sector banks, which will benefit if and when the interest rate cycle deeply turns and sees some sharp cuts. So that was, in a sense, a pre-budget kind of buying. Let's get you some market perspective on that note, Surabhi.
Absolutely. So let's get you the big voice of the day. Jeffrey Dennis of UBS remains overweight in India. He expects earnings growth to be 15 to 16% in dollar terms over the next 2 years.
We've been overweight for a while. We wouldn't change that just because you're heading into the budget. The areas of the market that we like some of the energy names, in particular, because they tend to be broad energy conglomerates to a certain extent. We like some of the banks. We actually believe you're seeing some reform within the state banking sector, which is worth highlighting. We like some of the industrials. We like some of the consumer stocks as well. I don't want to talk specific names, but those are the kinds of themes that we're looking at as a way to play in Indian overweight at this point. And also, I guess that perhaps a little bit of technology also. We think valuation should be high for a couple of reasons, related reasons. One is earnings growth is good. We're expecting earnings growth to be around 15 to 16% in dollar terms over the next 2 years, which I think will support these high valuations. So if you do an old-fashioned PE to growth ratio, India 17 times, earnings growth 15 to 16%. I think it's perfectly acceptable. Corporate sector performance is very strong in India generally. The rate of return on equity is very high. And so that also justifies high valuation. So we think you'll see some more upside as long as the budget's okay. And we remain overweight.
Okay, that's one view. Let's get all the action from the futures and options space. Nigel D'Souza is waiting by.
Well, just looking at the derivatives data, and in particular the options data, we should see a lot of resistance coming in at around that 8,950 to around the 9,000 mark. Even in today's trading session, the premium mode there close to have halved at around that 9,000 call. It fell from around 40 bucks to 20 rupees. The 8,900 call as well saw the premium fall from closer towards 90 rupees to sub 50 rupees. That's telling you that there is aggressive writing at those levels. And in fact, if we move to those levels, we should see some kind of selling. Now, the 8,600 put, that's being written at will. And over the past few trading sessions, we have been seeing a fair bit of open interest build up at that particular strike. The premium there is only around 8 bucks odd. The 8,700 put, meanwhile, did see the premium in today's trading session move from around 16 rupees to around 23 rupees. So the buyers of those particular strikes still make money. But in fact, the broad consensus is that writing at those levels should make you money, given that, in fact, we have the expiry that's going to play out just in the next week itself. Now, individual stocks that were in focus, we saw big buying on something like an IDBI Bank, while Syndicate Bank as well joined the party in the second half of trade. That stock as well did see some buying interest. IOB, that stock has been getting sold into. That one came in for a short covering bounce, while Jain Irrigation was up close around 6-7%, but no open interest build up, indicating that there was some shorts that were getting squeezed out of the system. Ashok Leyland as well as Titan, both of them did see unwinding of longs in today's trade.
Nigel, let's also talk about the coal auctions. Well, JSPL was hitting all the headlines yesterday with their massive wins. Today, however, it was a different scene. The news came in that the company has not qualified for Gare Palma 4x1. Tell us what you picked up.
Well, JSPL was definitely in focus in today's trading session. That's because midway through, CNBC TV18 learned that, in fact, the company will not qualify for their Gare Palma 4x1 coal block. That was the block that was operational, and they were getting close around 6 million tons from that particular block. Remember, the bidding for this block opens up tomorrow. That's the 21st of February, and the qualified bidders are the likes of Balco. We have Hindalco in there, SEML, as well as Sesa Sterlite. So JSPL's name doesn't feature in that particular list. The floor price to start off with was at around 1,561. That starts tomorrow itself at around 11 a.m. The significance of this mine is that they get 6 million tons from this particular block. The total reserves are in excess of around 120 million tons. And JSPL, they feed their Raipur plant, that's a Raipur steel plant, with all this coal that comes from this block. Nonetheless, a disappointment because they missed out on the Gare Palma 4x1 block. But on the flip side, just in yesterday's trading session, we saw that they won a couple of their blocks. So the Gare Palma 4, 2 and 3 blocks, both of them were won by them at a price of around 108 rupees. Macquarie, they're fairly impressed. They have an overweight stance on the stock. They say that, in fact, the starting price of the stock should be at around 262. They say that the 1,000 megawatts of power should give them an ROV in excess of around 40%. And they say that if the iron ore mess that's cleared out, that should be another key positive for the stock. And then it can move back towards was at 280 rupees. That's prior to the deallocation of these coal blocks. Deutsche Bank as well, they upgraded the stock to hold. They have a target price of around 186 rupees per share. They say that now JSPL, they're secure with regard to their long-term procurement of coal, and they can report a net profit of around 5.1 billion rupees in the next financial year, and in FY17 that profit can close to a triple. So all in all, a mixed day for JSPL. They win some, they lose some.
Thanks a lot for that, Nigel. The JSPL management itself defended their what they called non-aggressive bidding. They told CNBC TV 18 that they wanted to stick to their pricing limits. Listen in.
We did quote for the IPO of Gare Parma 4x1. We quoted a price level which we thought is the right price level for us to procure coal, and but in that round we did not qualify, and therefore we are not in the subsequent round of bidding. A lot of mines which are there in Schedule 2 and 3, and we have our plans drawn up. You know which mines we will be targeting. And given the way Gare Parma 4x1 was, we know it very well, what kind of mine it was, and we therefore had put a value which we think was the right amount, and anything in excess of that, we were not willing to bid for it.
And analysts supported the JSPL move. They believed it was sensible for JSPL to bow out from the bidding process of the Gare Palma 4x1. Let's listen to Rakesh Arora.
This is a very low quality coal. I think it's a very sensible decision by, JSPL management to withdraw at the right time. And there are a lot of coal blocks which are coming up, in the next few days. Coal Secretary yesterday was highlighting about another 50-60 coal blocks coming up. So there's plenty of coal in India. There is no panic.
83,600 odd crores. That's the kind of money that's already been raised in the ongoing coal block auctions. And those numbers came in from none other than Coal Secretary Anil Swarup, who held a press conference today. Pragya is standing by to break down those numbers. So first, let's listen into the Coal Secretary, and then it's over to Pragya.
So far, 15 blocks have been auctioned. Of these, the e-auction amount is 83,662 crore. But these blocks also entail an income to the states by way of royalty, which comes to 12,801 crore. This is apart from 83,662 crores. What's the figure? Royalty amount would be 12,801 crore.
Pragya Bhardwaj now joins in with her analysis to talk about the royalty that states would accrue from these auctions. Pragya, run us through the numbers.
Well, it was a very interesting press conference by the Coal Secretary Anil Swarup, and this time the focus of the press conference really was on the kind of value unlocking that will really happen as a ramification of the coal block auctions and the coal block allocations, of course, that are taking place. Now, the three routes that Mr. Swarup highlighted in the press conference was one being the kind of money that will be raised via the e-auction, especially via forward bidding. Now, for the auction of 15 coal blocks that we've seen, the amount that has been raised up until now stands at roughly about 83,662 crores. Apart from that, the state governments will of course be entitled to a royalty on all of the mines and the mining when it starts taking place. That amount as of today stands at about 12,801 odd crores. Apart from that, there's an indirect value that also gets created since the power tariffs will come down as a consequence of the fact that we've seen some very aggressive reverse bidding. So as a ramification of that, in the states that consume that power, you will see savings of close to about 37,050 odd crores, and all of those amounts are expected to go up as the number of coal block auctions increase. Apart from that, the states, of course, will be the big beneficiaries of this coal block auctions, especially some of these eastern states like Chhattisgarh, Jharkhand, West Bengal, or even Orissa, where you're seeing the bulk of the concentration of the coal blocks. Now, in that, he highlighted that Orissa has still now garnered about 607 odd crores. This amount is expected to go up because more coal blocks which are located in Orissa will come up for auctioning. But apart from that, up until now, for the 15 blocks, it's big gains for states like Madhya Pradesh, Chhattisgarh, Jharkhand, and West Bengal, wherein the gains stand anywhere between 13,000 odd crores all the way up to 40,000 odd crores. Maharashtra, of course, stands at about 1,800 odd crores. Now, of course, these benefits that the states will get will be spread over the life of the coal of the coal block. So that needs to be seen. But the states, of course, stand to benefit the most out of this coal block auction. So a very interesting press conference by him.
All right, time for a break now. But coming up, Tushar Pradhan joins in with his take on the Indian markets. We'll also get you some trading ideas for next week.
Aditya Birla Group presents Budget 2015, the Make in India Budget.